All right, welcome back, all you handsome devils. I'm extremely excited. As of the date of this video, we are very close to 25,000 subscribers strong. That means a couple things. I'm going to be doing an AMA, Ask Me Anything, premiering next week. So get me your questions, whether it's in the comment section down below, email, Instagram, direct message, however you want to get them to me, and I'll be answering your questions in a premiere video next week from the date of this upload. Now, with that being said, I'm very excited. We've been growing our family like crazy. Everyone's climbing that financial ladder, retiring early, and living off of their investments. So in today's video, what we're going to talk about is margarita money. Stop calling in sick, start calling in rich. I'm going to show you two very boring stocks on the board behind me that have consistently rewarded their shareholders, including myself. So without further ado, let's begin. Several months ago, a viewer commented on one of my stock videos and they said, Kenny Robinson invests like a 70-year-old man. And I thought that was a really interesting comment, and I thought to myself, is this an insult? Is it a compliment? Or is it just a simple observation? And the more I thought about it, and I said, you know what? This person's right. I do invest like a 70-year-old man. I like sleeping in on weekdays. I like stable cash flow. I like proven business models. I like boring companies. I guess I do invest like a 70-year-old man. So in this video, I want to show you some of the stocks that have done me very well and that I believe will continue to do me very well. Now, Toronto Dominion Bank, ticker TD, is a major Canadian financial institution. Although they just don't service Canada, many of you might have TD Ameritrade accounts, which is their brokerage subsidiary. Now, over the past 15 years, I always like to include 2008 when I can. It was one of the worst financial crises of the past century, so I like to include that in returns because essentially since 2008, a lot of stocks have done this, right? So it's a little bit skewed, so that's why I like to include one of the worst years that we've had in modern history. So including 2008, TD stock has averaged 12.8% total return. That includes capital appreciation, which means increase in share price. That also includes dividends reinvested. So compound annual average growth rate is 12.8%. Now, with that being said, their dividend payout ratio is 44%. For newer investors, for every dollar of earnings, right, every dollar of profit, 44 cents of that is currently being paid out to shareholders. So obviously, the lower the number, the more stable that dividend is, and it tells us that the company has room to increase their dividend in the future. Whenever you see a high payout ratio, except for REITs, whenever you see a high payout ratio, that could signal that there may be a dividend cut in the future if the company goes through some hard economic times. Now, the current dividend yield is 3.87%. And for those of you that are veterans of my channel, you know that normally I don't mention yield as a percentage because it's pretty much, irrelevant. It's useless because by the time you're watching this video, the yield as a percentage is already different, right? And so I like to show this though because a lot of people say, Kenny, all your stock picks, they have 1%, 2%, 3%, maybe even a 4% yield. That's not going to make me rich. I want 10, 11, 12%. But don't lose sight. Don't go short-sighted on that. Think about the total return over time, including terrible economic periods. That's really the important number when you're investing for the long term and you want financial stability. Now, if you invested $1,000 just 15 years ago, you'd have over $6,000 today. Now, people ask me, wow, that's a sexy chart. It looks like it's near its all-time highs. Kenny, is now a good time to get in? Are you buying more? And I always like to preface it, and I know it's annoying, but I'm not going to give out personal financial advice to someone when I don't know their personal situation.
It's free real estate.
I can just share what I'm doing. I really don't care about the price that I buy a stock at. Now, right there, technical people, their brain is exploding. They said, did Kenny just say he doesn't care what the price of the stock is when he buys it? Well, obviously, just like you guys, I like to buy it as low as possible. But I know I'm smart enough to know that I'm not smart enough to figure out the stock market. None of us are. Those that believe they are going to be a lot poorer in the future. History shows us, right? Your portfolio and your money is like a bar of soap. The more you handle it, the less you'll have, right? In fact, Graham just recently uploaded a video talking about this, right? The longer people stay invested and just let their stocks perform for them, the more money they have rather than trying to time the market. It's about time in the market, not timing the market. So again, this is my first boring stock of the video, Toronto Dominion Bank, TD. Excellent. I'm buying more. I believe it will continue to perform as time goes on. Now, The other stock I'd like to mention is Honeywell International. Honeywell is in so many different industries with so many different products and services, I couldn't possibly name them. I'll just have them roll up on screen somewhere because they are in almost every industry. For all of you 3M investors, Honeywell is a similar stock. They're in basically everything, and I guarantee you in your home, in your car, in your workplace, wherever you're at right now watching this video, there is at least one Honeywell product within sight or with arm's reach. I'm not kidding. This company is in everything. Very boring stock, something that you don't see every day. 15-year return, almost 14%. Payout ratio is rock solid at just 34 cents on the dollar. The current yield, though, look at that tricky little yield, 1.88. Is Kenny being stingy? What the heck is that? Again, look at total return. Look at the type of performance people get when they pick these old, boring dinosaur stocks. $1,000 15 years ago would have netted you $7,087. Again, people ask me, well, do you ever invest in Tesla, Amazon, things like that? Look, those are cool stocks, fun stocks, interesting. I like Amazon, but you know what I also like? Investing in companies that sell Amazon all those cardboard boxes, the billions and billions of dollars that they do in cardboard corrugated packaging products, right? So what I like to do in order to work less, have more freedom of my time, is I focus on quality, not hype, right? I try to develop more and more patience every day through getting rich slowly but surely, right? The tortoise and the hare, because I know that the finish line is actually a lot closer than I might think when I begin investing in dividend stocks. So I don't get greedy right off the bat. I also, again, I invest for the long term. I don't care if the market crashes next year, the year after that. I know it will, and I'm going to buy more. It was interesting. I was speaking with a really good friend and a business partner just a few days ago, and he said, you know, I don't know about the current market conditions, but I've just been dollar cost averaging, DCA. And for newer investors, what that means is you're just buying in a set amount per month or per week or per period, however much you invest or whatever time period you invest, like say once per month, you invest $500 per month and you're buying some at the high prices, at the low prices. So over the long term, you're getting a good average price. So play the long-term game. Don't worry about what next month is going to do or the month after that, right? Worry about the next decade. Where are you going to be at that point in time, right? And it's all to be able to call in rich and go on vacation. So if you like these types of videos and you haven't subscribed yet, what are you doing? Hit that subscribe button and let me know in the comment section down below what 70-year-old man stocks you have. Look, I'd love to chat more, but I have to go. I have a flight to catch going down to Austin to talk to my good buddy, John Fedro, the mobile home millionaire. I'd love to stay and chat, guys, but I got to go. See you later.